So a lot have been said about Wyckoff accumulation as a concept in reading the markets, looking at fundamentals, and just looking at trends. In this video, I actually want to apply this to the real world. What's happening at the moment and how we can use this. You don't need a degree to understand this, I can tell you that, okay? But before I jump in, guys, it's FD for Search5.tv with yet another video. Educational content is our priority, and this is no different. But also, please note that this is not financial advice. These are just my own opinions looking at the crypto markets that place I'm a part of, and I want to share my knowledge with anyone who can listen. But it's not financial advice, it's educational content. And for those from the UK, anything crypto related is deemed risky by the authorities, so you should not be watching any crypto related content. Those from the rest of the world, welcome to Search5.tv. Please do consider subscribing to our channel, a channel that brings you educational content that uses non-conventional approaches. And today, this is one of them. Wyckoff accumulation, a term that has been abused recently and over the years by people who all of a sudden they become experts because they are in cryptocurrencies, or they made a killing on a meme coin. All of a sudden they understand what Wyckoff accumulation is as a concept. Do they? I don't know. So let's start by describing what the Wyckoff accumulation is. What the Wyckoff accumulation phase is a stage in the market cycle where large institutional investors accumulate a significant amount of an asset without causing a substantial price increase. This phase typically occurs after a significant downtrend and is characterized by sideways price movement, where the asset's price fluctuates within a range. The accumulation phase consists of several phases and events, and here I'm gonna just list them in brief. Not conclusive, but I'll list the main ones. So there is what's called a phase A, and I also believe there are many phases within a phase, but let's just focus at the high level. Phase A, which is called the stopping the downtrend. This phase marks the end of a prolonged downtrend. It usually features a selling climax, which will denote with SC, followed by an automatic rally, also denoted by AR, and a secondary test, which is denoted by ST. Then we also have phase B, which is building a cause. In this phase, the market ranges within a defined support and resistance level. It is a period of consolidation where the asset's price is accumulated by smart money. Who is smart money? That's debatable. Phase C, spring or shakeout. Phase C often includes a spring or shakeout where the price temporarily breaks below the support level to test supply. This move is designed to trap weak hands before the real uptrend begins. So if you are shaken out and the market leaves you behind, you are the weak hand. Goodbye. Phase D, testing resistance. After the spring, the asset typically re-enters the trading range and start testing the resistance level. This phase shows increasing demand. And finally, phase E, which is the markup phase. And in this phase, the asset breaks out of the accumulation range, leading to a new uptrend. So in brief, those are the 5 different phases of the Wyckoff accumulation concept. Now, let's try and apply the Wyckoff accumulation to the Bitcoin chart. For clarity or for simplicity, let's just stretch the chart from early 2021 to July 2024. Let's just try and apply the Wyckoff accumulation concept. So looking at the chart of Bitcoin from early 2021 to early 2022, during this period, Bitcoin experienced a strong uptrend followed by sharp decline starting around November 2021. That's when officially now we know the bear market started. The decline could be identified as the start of phase A. Remember phase A, where the phase marks the end of a prolonged downtrend and is denoted by SC, where the selling climax likely occurred around mid to late 2021. I think we had 2 tops, one in March or around March time and the other one around November time. That was the selling climax or SC, part of phase A, followed by an automatic rally or AR in early 2022. Those are all part of phase A. Mid 2022 to late 2022, this period showed a prolonged consolidation phase with multiple attempts to push higher, but with frequent pullbacks, suggesting it might be phase B of the Wyckoff accumulation. The price stays within a range, indicating that larger players might be accumulating. Early 2023, so larger players were accumulating throughout 2022. If you didn't know that, if someone tells you larger players are accumulating now, yeah, bloody 2024, they accumulated 2022. Right now, they are playing a different game. The price briefly dips before moving back, that's in early 23, into the consolidation range, which will be interpreted as a spring or shakeout phase. This is typically where weak hands are flushed out and strong hands begin accumulating more aggressively. So 2023, that's when they started accumulating heavily, and then we had that run up towards the end of 2023. which was crazy. I think it was from mid-October. That was crazy. Just went. So mid-2023 to early 2024, the price begins to test resistance levels more frequently and starts to show higher lows, indicating increased demand. This could be the phase D, where the price is preparing for a breakout. I think we saw that. We had a breakout in around March where Bitcoin reached an all-time high before the halving, which was unheard of, and people were not prepared for that. Mid-2024, by this period, the chart shows a significant upward movement, breaking above the previous resistance levels. This suggests we might be in phase E, where the price enters the markup phase, starting a new uptrend. So forget about the sideways, the boring sideways movement. We are preparing for phase E, where we are breaking up to start a new uptrend. And this time when it happens, it's going to skyrocket and you'll be left behind. So if you wanted my opinion on what stage we are in phase E of the Wyckoff accumulation from our point of view. The current stage of the Wyckoff accumulation, based on this analysis, that the Bitcoin price chart appeared to be in phase E of the Wyckoff accumulation cycle as of mid-2024. The price is broken out of the consolidation range and established during phase B and D and is moving upward, signaling the beginning of a new bullish trend. This phase is typically characterized by sustained price increases as the market enters a markup phase where the demand overtakes the supply, driving prices higher. This analysis suggests that the market sentiment is turning positive and Bitcoin could be entering a period of extended growth. So that's where we are. So anyone who is screaming we are entering a bear market, that's it, that's over, they don't know what they are talking about. If they are students of text, decent text, that is, not self-educated crypto degens, what do they know about financial fundamentals or market dynamics? Question. Anyway, to cap this off, let's try and apply this Wyckoff accumulation concept to the price predictions for Bitcoin and when I think Bitcoin will peak and the price around that time. Indulge me for a minute. So, personally, I'm considering a peak around Q2 of 2025. That's what I'm considering. Having said that, it could be either side of that quarter, okay? We are talking of April to July. So it could be early 23 or it could be August to October time, okay? But for me, it's Q2. That's what I think will happen. That's where we'll have the peak. So trying to estimate the target price for that period in 2025, I'll consider several factors here. Let's start with a brief summary of the previous cycle analysis. So in the previous cycle, Bitcoin's price staged from around $3,000 in late 2018 to its all-time high of nearly $69,000 in late 2021. I think we had an initial peak in March. I think it was around 67, and then we had 69. This was a significant move, roughly 23x from the bottom to peak. That was a 23x, okay? If you look at those who are into technical analysis and you are educated, you are well-versed within that. If you look at the Fibonacci extension, the Fibonacci extension level can be useful for projecting potential price targets. If we measure from the peak of around 29,000 down to the cycle low, this current cycle of about 16,000, I think it was 15 something, but let's go with 16,000 to estimate the bottom during the accumulation phase. The 1.618 or the 618 as most people call it, 618 Fibonacci extension level will be a key target which falls around 110,000 to 120,000. To me, that is the target. In Q2 of 25, the Fibonacci extensions will take us to between 110 grand to 120 grand during Q2 of next year. Logarithmic growth in market sentiment for Bitcoin price movements tend to follow a logarithmic growth phase. So Bitcoin's price tend to follow a logarithmic growth curve, which accounts for diminishing returns as the market cap grows. Of course, we will need more money to move Bitcoin as the market cap grows. Given this pattern and the fact that each cycle's returns are typically smaller than the previous one, a conservative estimate will suggest a target slightly above the previous all-time high, taking into account the market's maturity and potential institutional investment or involvement. A price target of about 120,000 to 150,000 by Q2 of 2025 could be plausible. So I'm not just throwing figures around. I'm actually giving you my rationale or the justification why I think the prices I'm sharing with you are possible. But there is something to actually consider as well. You got this psychological and technical resistance, and that psychological and technical resistance, for me, I think is likely going to be 100K, and it will play a significant role. Given the historical patterns, Bitcoin could break through these levels and reach new all-time highs of between 120 to 150, but we may take several attempts to break through and establish support above 100K. That's my take. Based on the Wyckoff accumulation, guys, I think Fibonacci extensions and historical growth curve of Bitcoin. A potential price target for Bitcoin by Q2 of 25 could range between 120 grand to 150 grand. This projection assumes that the current uptrend continues, supported by positive market sentiment and strong demand leading into the next major cycle peak. So you can see there are so many qualifiers that need to be achieved here or fulfilled. Those qualifiers are not met, then we've got a problem. This estimate should be monitored closely as we approach Q2 of 2025, taking into account any macroeconomic factors and changes in market dynamics that could influence Bitcoin's price trajectory. So that's my small piece, guys, on where I think Bitcoin is going and how I'm using the work of accumulation to lead me to this price prediction. People will throw price predictions with no rationale or justification at all, but I've tried to do things differently. I hope you found this helpful, and please do your own research and see if you can add more or learn more around what I just shared with you today. Until the next video, guys, I'm your host, FD for SigPack.tv, signing out for now. Bye.